In this video, I will show you the strategy I use when stocks crash and how I'm still able to generate 20% returns for my stock portfolio. In the stock market, you will have bull markets when all the stocks will go up. You will have bear markets when all the stocks will go down. You have this cyclicality, and if you take advantage of this cyclicality, you can make a lot of money. You can have great gains in the future. So in this video, I will give you some tips, how I do it, and how I've been able to compound my capital using the stock market. In case this is your first video from this channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year, including 2022. It was a difficult year for everybody. I took advantage of this volatility to buy more quality stocks, and this is the reason I've had great gains. So the first thing I want to talk about is when you have a bear market and when stocks are going down and all your portfolio is red, you need to be ready. I always have a watch list before corrections happen. I will start with a great quote from the Templeton family. You have Lauren Templeton, you can type on the internet, great investor. She is the niece of the great investor John Templeton. She manages a fund. And the reason she is so successful right now is when stocks are up, when you have a bull market, when stocks are in the green, everybody is happy, everybody is sharing screenshots of their gains, of their portfolio. This is the perfect time to think rationally about your future buys. This is the perfect time. I mean, stocks are going up, you have no deals, the market is up, valuations are high. This is the perfect time to analyze other businesses, potential purchases in the future, and to create your watch list. So, Lauren Templeton is always doing this. When stocks are up, going higher, valuations are high, she is building up her watch list. Okay, analyzing other businesses, other stocks. At what price will she be comfortable buying the stock? And then putting on a note the target price. Okay, imagine you're not comfortable buying, Apple at current prices, and you think it's worth X dollars. You have a target price of X amount of dollars. Okay, very well. This is the time to do the research. When stocks are already dropping, people are panicking. This is not the time to do the research. You need to be prepared beforehand. So if you're watching this video and stocks are down, maybe it's already too late. What I want to say is you need to prepare before a crash happens, because you will be much more rational. When stocks are going down, you open Twitter, you open YouTube, it's only red. You go and watch CNBC television, and all the financial media is telling you the same thing. Stocks will go down because of bad macro. Some people are not strong enough mentally to make rational decisions. Maybe this is you, maybe this is not you. In all the cases, it's better to be prepared rationally before. So before the crash, have a clear watch list and have a target price. And if stocks are not crashing when you're watching this video and stocks are already high, it's a great time to prepare. So you build a watch list with all your favorite stocks and you have a target price. And when stocks will drop in the future, say in the next year, in the next 2 years, you will be ready, you will have done the research. You can just go back to this watch list with your target price. And if the stocks have dropped to your target price or below, you buy. If the thesis is still valid, this is a perfect time to be a rational buyer of stocks. This is why the Templeton family is so successful. They've just mastered this craft of being prepared. So when people are panicking, they operate rationally and buy great stocks at a great price without panicking. So this is the first thing I use, and I completely copied this strategy from Lauren Templeton to have a clear watch list with clear prices. And when stocks drop, I know exactly what I buy at exactly a good price, and I'm here for the long term. So I've had many examples when I bought companies, when everybody was panicking. And you go on Twitter, YouTube, you see red, people are panicking, people expect a drop further. And I just bought silently. And this was an easy double, easiest double of my life. You just take advantage of people panicking and you make a lot of money. So this is the first thing I wanted to talk about on this video. The second thing is I track intrinsic value versus price. You know that the intrinsic value of business is different from the stock price. I'm sure you've seen several of these charts online where you have an intrinsic value of a business that is going up over time because the revenue is going up, the earnings per share is going up, okay, over time, and you have the price. I will share with you some elements. Okay, very well. If I put my face here, imagine this is the intrinsic value of a business. Many businesses are like this. You can name Berkshire Hathaway, you can name Meta Platforms. The revenue is just going up. The earnings are just going up. But if you look at the stock price, Meta Platforms, Facebook is a good example of this one. Sometimes you have a stock price that is following the earnings. And for some reason, because of earnings growth that is decreasing a little bit, the stock is dropping like a rock. Boom, like this. You can check the graph from Meta Platforms. This is exactly what happened. And then we are back to growth. This is your stock price in red. Stock price here. The best time to buy is in this zone when you have a big discrepancy between a declining stock price and the fundamentals, the earnings, the intrinsic value that are holding well. This is it. So for all the stocks that I have on my watch list, I check the intrinsic value if the fundamentals of the business are going in the right direction, and I check the stock price. And I've had plenty of deals in my portfolio when the stocks are going down and you just buy here. I bought Meta Platforms exactly at this point. I bought a lot of stocks for Meta Platforms here, and people were complaining. And you know what? People that complain and people that panic at this time in 2022, these are the people that did not do the due diligence before. And this was why I wanted to start with this first point. You need to be prepared before corrections happen. So this was the first scenario you could have when stocks are down but the fundamentals are holding up strong. There is a second scenario I want to share with you. It's when you have the fundamentals of the companies that are still holding strong, okay, very well over the long term. These are the fundamentals in red. And you have a stock price that starts to follow the earnings. And then for some reason, the stock price is doing nothing. So it's not a crash. It's not a stock price. You don't have a lot of panic. But for some reason, you have nothing. I've had this beautiful example for a stock called Fortinet, so in a cybersecurity space in 2020, where you had all these cybersecurity companies like Palo Alto Networks, CrowdStrike, that went up in 2020. And then Fortinet went nowhere. But the fundamentals, the intrinsic value, the earnings of the companies were all going up and to the right. So this creates a discrepancy, a gap. And guess what? I bought Fortinet massively here. And at the time it was maybe 20% of my portfolio. Guess what? It went up massively and then it outperformed the intrinsic value of the business. And I sold at the top. And it was maybe the easiest triple I've had in the stock market. You can take advantage of the volatility because in the stock market, people are not rational. They are emotional. They follow the crowd. So if you can take advantage of these gaps, these discrepancies, you buy at the good time, you can make beautiful gains in the stock market. So when you have stock market crashes, when you have stocks that go nowhere, that are slightly declining, you can take advantage of this beautiful volatility. And let me go back to the first example I had with Meta Platforms dropping and then not following the intrinsic value of the business. Drops are opportunity, not chaos. As Warren Buffett would say, the market is here to serve you, not to instruct you. It's not your guide. You know your emotions. You can take control of your portfolio. So let me go to the next point now. I never sell just because stocks fall. I reassess the fundamentals. Sometimes stocks are dropping. It's part of life of being an investor. You can fall for several reasons. Either the stock market is in a bear market, so all the stocks are declining very well, so the business is not impacted. In this case, you can just reassess the fundamentals. And if the fundamentals are holding strong, it's a hold. No need to sell. And you have another scenario where the market overall is not dropping, is just one of your stock that is plunging. Why? Because of bad performance, for example. Bad revenue growth, bad earnings growth, bad margins, bad guidance. You have plenty of reasons that a stock can go down if the fundamentals are deteriorating. In this situation, I reassess the situation. I check the fundamentals. I check if the thesis is still valid. If it's still valid, I hold. If it's not valid and if the thesis has fallen apart, I sell. You have to have a lot of discipline in this scenario because it can be quite emotional for a lot of people because it's a sudden drop, etc. In this case, discipline helps. And you see that all these points, the first 3 points, gather around discipline, being prepared, being sure of what you own, monitoring the KPIs, the key performance indicators for the business, the revenue, the earnings per share growth. If the thesis is still intact, you just ride the wave and hold. If the thesis is falling apart, you just sell and move on to other opportunities. You will have plenty of other opportunities and make plenty of money on other stocks. So don't worry about cutting the bad apples of your portfolio. Next point. I buy more of the same stock only when it's still high quality. So when you are in a bear market, 2022 is a great example of this one. You had some panic in 2022 for good reasons. You had stocks that went down in 2022. Some stocks went down 10%. Some stocks went down 20%. Some stocks went down 50%. In this case, normally, if you're prepared, you have a great analysis. This is a stock on your watch list. You can buy the same stock that is included in your portfolio only if the thesis is still valid and it's high quality. If the margins are still high and it's still growing, the business is still growing with a lot of efficiency, that's a perfect moment to buy more because you have a great business available at a discount. This is the golden scenario you need if you want to invest in the long term. So buy as many cheap shares as you can before people are calmed. When people are panicking, and you still believe in the thesis, it's still high quality, this is the golden opportunity for you to buy at a discount. This is the discount for your favorite stocks. I ignore macro noise. I focus on cash flow and valuation. Yeah, did we ever mention the macro on this video? I don't think so. We just focus for our buying opportunities. We just focus on cash flows, earnings, revenue, intrinsic value, fundamentals. This is what matters. So all the macroeconomists will say that this is the end of the world. Most of the time, the end of the world doesn't happen. So you can get plenty of opportunities if you just shut off the noise. Focus on fundamentals. Focus on businesses. Focus on cash flows and valuation. Next point. I run my portfolio like a business, not like a casino. I don't trade a lot. I don't go in and out of stocks. When I hold for years. This is part of being a long-term investor. You need to buy with a lot of conviction. So the threshold for me to buy a stock is very high. It's very, very high. I don't buy crappy businesses, bad businesses, mediocre businesses just because they are cheap, So only high quality assets that are growing their intrinsic value, and there is a discrepancy between the intrinsic value and the stock price, and I think it's cheap and people are panicking. This is your golden scenario. And if you're watching this video and stocks are dropping, like you have a stock crash of 10, 20, 30% for some reason, this is a golden scenario to take advantage of the volatility. Because this is when you have stock crashing that you create long-term wealth. You have plenty of deals, plenty of discounts. This is when you can make generational wealth, as we say it. So if you want to stop reacting emotionally during market drops and start investing like a real owner of businesses, I've helped over 200 people do just that. You can book a free call below. We'll talk about your portfolio and I will show you how this method applies to your case. I have a coaching program. As always, you have a link in the description and you can even book a call. On the description, there is a link to book a call with me directly. We'll have a friendly chat about your situation, your portfolio, and how you can implement a winning strategy so you can outperform the market and create generational wealth. So just click the link in the description, book a call with me, and I will see you on the other side.